Now we'll start with numericals based on financial statements. The first level numericals, these are without adjustments. We'll learn how we classify the trial balance into trading, profit and loss account and balance sheet. Well, we'll start with the first question. From the following balances taken from the books of Hari and Company, prepare trading account, profit and loss and balance sheet for the year ended 31st March 20. Capital 3,50,000, building 187,500, machinery 92,500, debtors are 35,000, investments 35,000, general expenses 8,000, rent paid 37,100, proprietors drawings are 6,500, electricity charges 1,900, carriage inward 8,500, cash at bank 30,000, returns outward 1,100, salaries 11,100, discount allowed 3,000, interest on investments 1,000, stock in bracket they have given 1st April 19, 1,65,000, bills payable 50,000, sales 6,35,000, purchases 4,68,500, wages 25,000, cash in hand 18,000, creditors are 1 lakh and returns inward are 4,500. Well, one adjustment they have given, closing stock was valued at rupees 1,82,100. Now students, the first thing we do is we take trading account, we take profit and loss account and we take balance sheet. So here we have trading, profit and loss and balance sheet. Well, about trading account, we write trading account for the year ended 31st March 20. About profit and loss account, we write profit and loss account for the year ended 31st March 20. And in case of balance sheet, we write balance sheet as at 31st March 20. Well, in balance sheet, capital and liability side and asset side, in trading and P&L, particulars amount rupees, particulars amount rupees. So what we did, we just have the formats of trading, profit and loss account and balance sheet ready. Now we classify profit and loss account debit side into 4 different groups of indirect expenses: administration expenses, selling and distribution expenses, financial expenses and other expenses and losses. Well, in case of balance sheet, first we record capital, then on liability side, non-current liabilities, current liabilities, on asset side, non-current assets, current assets. Well, the first step was to draw the formats to classify the profit and loss and balance sheet. Once your formats are ready, guys, directly we can start with the posting of trial balance in this financial statements. The first item, capital. So in balance sheet, liability side, capital, below that opening 3,50,000, building will show as a non-current asset, balance sheet asset side, machinery, non-current asset, balance sheet asset side, debtors, balance sheet, current assets, investments, so below non-current assets and above current assets. On asset side, balance sheet will make a column of investments, outer column 35,000. General expenses, they go to profit and loss, administration expenses 8,000, rent paid, it is an indirect expense, profit and loss account, administration expenses, proprietors drawings we show as a deduction from capital, liability side, opening minus drawings 6,500. Electricity charges, P&L, administration expenses. Carriage inward is a direct expense. It goes to trading account, debit side, direct expenses column will write to carriage inward. Cash at bank is a current asset, balance sheet asset side. Returns outward. Returns outward means purchases returns. So trading account debit side, to purchases less purchase returns will record 1,100. Salaries, P&L, administration 11,100. Discount allowed, P&L, selling and distribution 3,000. Interest on investments, P&L, credit, it is a income 1,000. Stock on 1st April 19, it's a opening stock, so it goes to trading account, debit side to opening stock 1,65,000. Bills payable, it's a current liability, balance sheet liability side 50,000. Sales, trading credit 6,35,000 inner column. Purchases, trading account debit side 4,68,500. Now from that we will deduct purchase returns and the net answer will post on outer column. Next, wages. Wages is a direct expense, trading account debit side. Cash in hand is a current asset, balance sheet asset side. Creditors is a current liability, balance sheet liability side. And returns inward means sales returns will deduct from sales and net amount will record on outer column. So this is the posting which we did from trial balance. Now they have given only one adjustment. Closing stock was valued at rupees 1,82,100. Well, closing stock is an adjustment, and for adjustment we give minimum two effects. Effects of closing stock will be trading account credit side by closing stock 1,82,100 and balance sheet current assets 1,82,100. Now, if you take the total of trading account credit side, it comes to 8,12,600, which is higher. So the same total we record on debit side 8,12,600. From that we deduct debit side of trading account. The difference we get is 1,46,700 on debit side, that is to gross profit. So in trading account we got a gross profit of 1,46,700. This gross profit we transfer to profit and loss account credit side by gross profit 1,46,700. Then after, if we take the credit total of profit and loss account, it comes to 1,47,700. The same total we record on debit side 1,47,700. From that, if we deduct all indirect expenses, we get a difference of 86,600, which is net profit. This net profit, guys, we add with capital on liability side of balance sheet, where you have done the calculation of opening capital minus drawings. Now with that we'll add plus net profit 86,600. We'll get a closing capital of 4,30,100. We'll write on outer column balance sheet liability side, and then if we take the total of liability side, it comes to 5,80,100. And if you take the total of asset side, you'll get the same total, 5,80,100. So your balance sheet will tally.